For more on Morgan Stanley, we welcome banking analyst David Hilder from Susquehanna Financial Group. Starmine ranks David at the top of its analyst ratings. He joins us on the phone. David, you just heard Scarlett talking about it. You've had a few minutes to look through Morgan Stanley's earnings. What do you think?
Well, I do think they were clearly better than expected. The consensus had been for 40 cents. The report, the GAAP earnings were 50 cents. I would say that it looks more like 54 cents of operating earnings to me when you back out various write-downs in the Japanese joint venture and a tax benefit and the DVA credit spread adjustment. So overall, I'd say better than expected on the bottom line. In institutional securities, I would actually focus on the fixed income business. As was mentioned, certainly this has been a weak area for Morgan Stanley. It essentially just broke even in terms of trading revenue in the fourth quarter. But in the first quarter, there was $1.8 billion of fixed income currency and commodities revenue, or FIC, as it's known in the trade. The equity trading gains were nice. They were up, as was mentioned, to $1.7 billion from $1 billion in the fourth quarter, but that's sort of within the range of all.
David, I want to jump in, though, and talk about fixed income trading for a moment. Sure, it's a turnaround. Morgan Stanley lost $1 million in that business in the fourth quarter. But if you compare it not just to the rest of the street, but to what Morgan Stanley was generating in fixed income trading even 3 quarters ago, it's still not that much. I mean, how much work still has to be done to get this business up to a level where it's generating the kind of revenue that is competitive with the rest of Wall Street and is going to satisfy Morgan Stanley investors?
Well, that is a long-term fix. There's no question that that's what needs to happen in the fixed income business at Morgan Stanley. I was more focusing on what the market reaction would be today. Over the long term, you're right. Morgan Stanley needs to build out fixed income trading. It's producing, if you average revenues over 4 quarters or 8 quarters, it's producing revenues far less than many of its competitors from the FIC business. And that's really both a matter of putting salespeople and traders in touch with clients, committing capital, and taking risk. And obviously the theme over the past couple of years at Morgan Stanley, after the near-death experience it had in 2008, has been to reduce risk.
Let's talk about the other business that is so important to James Gorman, and that is the wealth management business. From a profit contribution standpoint, it's not quite a rounding error, but it still doesn't amount to much. I just looked through the numbers, David, if you haven't had a chance to see it. $183 million in net income contribution in the first quarter. Are you confident that this business can start to generate real money by the end of 2011 and really be declared a turnaround effort, something comparable with, and put up the kinds of numbers that are comparable with what we saw from Merrill Lynch just a few days ago?
Well, of course, it's going to take a change in the ownership structure to get it really to be competitive with Merrill Lynch in terms of what it contributes to Morgan Stanley's bottom line, because 49% of that business is still owned by Citigroup.
Right, and they plan to buy that out next year, if I'm not mistaken.
It's actually over a 3-year period, beginning next year and then ending, I believe, in 2014. So it's going to take a long time. I think what's actually perhaps more important is that the revenues were up a little bit, 3% from the fourth quarter, 6% year over year, and the pre-tax margin is still stuck at 10%. That's down from 12% in the fourth quarter, up from 9% a year ago, but really the long-term goal is to get that pre-tax margin up to 20%. And again, I think over time, Gorman has been clear that this is a long-term fix. I think, unfortunately, the story for Morgan Stanley is that both fixed income, the wealth management business, and asset management, right? It's all a long-term fix. It isn't the sort of thing that you can turn around in a quarter or two.
David, thanks for joining us with that perspective. David Hilder, equity research analyst at Susquehanna Financial on Morgan Stanley.